I want to start by saying that tokenization is a very powerful tool, very powerful technology. But any technology that comes in is first used by fraudsters. Be aware of that when you evaluate any tokenization. With this caveat, I am going to start talking about. So all of us are CFAs. So we talked about illiquidity, market price not there, but anything which has cash flows and predictable behavior can be monetized and should be tokenized. That's my theme. So cash flows should be predictable, can be predicted at higher frequency. I should be update my prediction every week, every fortnight, every month. Then I have more confidence. And I should have more confidence in my prediction so that I can put better price onto the product. That is given, whether you tokenize or don't tokenize, right? Now, how tokenization can help in this? I am going to explain. Now, let us go to the history of finance. So, Sandeep mentioned that the first company was formed in year 1600. So, which was East India Company. So, imagine East India Company. You are on the board of East India Company. How frequent you will get financial reports? Any guess?
Once a year.
Once in a year. Let us see. Okay. Now, if I have to get information, I have to send message. That time for ship to travel from London to India was 9 months. Maybe one ship will travel once in 6 months. So you have one question to ask. The question will reach India after 15 months. Somebody will prepare the answer, send the answer, it will come back to you maybe after 20 months. So the financial reporting was between 3 to 5 years. Right? See, we have to understand that the financial technology is dependent on the technology around us. From 3 to 5 years, we came to annual when telegrams came or telegraphs came. Before that, it was impossible even for companies within India. If an operation within Bombay and Calcutta, that time's names, getting information would take 4 to 5 months. Right? Audited accounts were unknown. As far as my research goes, the first audited account was published in year 1800. Before that, everything was unaudited. Stock trading was happening. He mentioned that the Dutch East India Company's market cap was higher than anything that you could ever imagine. It was based on guesswork. Right? US gap came in 33-34 after the 29 collapse. International Finance Standards came in 2001, just recently. Quarterly reporting came when faxes came. Before that, it was a quarterly reporting. Even with telephones and telegrams, you couldn't do quarterly reporting because you couldn't transmit information easily. You could ask questions, but not entirely. When faxes came, quarterly reporting came, and we have stopped there. Now, world has gone to internet. Each and every company has a ERP system. They know their finances on daily basis, next day morning. Right? But we have stopped at quarterly reporting, and that is one of the main problems. Finance has not moved, kept pace with technology. Now, I call it blockchain DLT because DLTs are of different types. Blockchain is one type, there are other types, hashgraph. In decimal point, we use hashgraph, we don't use blockchain because hashgraph is faster and cheaper. We are Indians, we want to save money. So DLT, I did not explain this. Most of us understand. A lot of talks have been given that it is distributed, you keep information around. different servers, so that information is immutable and you can have trust in the information. No one person can manipulate the information. Known to us for last 7-8 years. Okay. DLT enables concurrent transaction process for tokenization and ensures information symmetry. See, all the problems that we have in the financial markets are because of information asymmetry. Real estate financing, risk of fraud, right? Because information is not available, maybe quarterly, that too after 45 days after quarter ends. Right? DLT can solve this problem. We require one more thing. I will come to that next slide. So what happens is, sorry, I will go back. So how accounting can get DLT is, there is something called triple entry accounting system. All of us have heard of single entry accounting system, which there may be 700 years ago. Then came double entry accounting system, and now it's time for triple entry accounting system. Now, what is triple entry accounting system? Is that the third entry will lie on blockchain or on DLT, and on that we will hang the entries in the two organizations which are transacting. Any accounting is between two organizations. Each organization is passing double entry. So there are 4 entries passed for each transaction. What will happen is that with DLT and triple entry, you will have 5 entries. One on the DLT and 2 normal transactions. Okay. If that happens, what happens is that the confidence in the accounting system increases. Chance of fraud reduces. Now, auditor has to come and double check transactions annually, give certificate that there is no fraud. Right? But when transactions are there on DLT, encrypted, that people who can see transaction can see, others cannot see the transaction. The counterparties can cross-verify. That time, your ERP system, which is sitting inside the company, can move to a level of society. Entire society would have information, right, about the finances of that particular entity or network. I will come to what I mean by network. And that will enable tokenization, that will enable reduction in risk, that will enable increase in returns, because then you can distribute returns at a higher frequency. Clear enough? Now with this as a background, now what happens is when you talk about, let's say, public issues, you're talking about legal entities. But tokenization can atomize. So right now in the world, there are about 335 million companies. The registered entities, as per the World Federation of Stock Exchanges, is 58,000. So only a fraction of companies are listed. Companies that depend on private finance are remaining companies. So that's the market that is to be untapped. 99.9% of the market is untapped as of today. Why it is untapped? Because people don't have faith into the finances put out by those companies. So when tokenization happens at transaction level in organizations, it will create faith into the accounting system of those organizations, which will enable you to create issue tokens on either the entities or their profits or their cash flows or a part of their network. I'll explain that further. Which will lead to efficient price discovery. Why? because now you have more information as compared to past. And also you will have more confidence in the information. Right now, many small cap companies, you have finances out, you want trust. Even in US, there are many ADRs of Chinese companies where finances cannot be trusted. What they are filing in 10K and 10K. Oh, sorry, they have in some other field. So it is possible now to segregate ownership of legal entity from ownership of value accrual. Value accrual can happen, let's say, by transaction, and legal entity can be a separate network. Let me give an example here. Say, take a company like Panasonic. Panasonic is a legal entity which is supplying batteries to, let's say, Tesla. Now, it is possible that other parts of business of Panasonic might not be doing as well as its ramp up of supply to Tesla. Is it possible to tokenize the relationship between Tesla and Panasonic? We discussed invoice discounting, and we discussed that there is a risk in invoice discussing financing. Why? Because transparency is missing. But when I bring transparency into the contract, into the entire process of delivery, invoicing, everything is transparent, then that part of network can be monetized by, let's say, Panasonic separately, and they can raise finances only on the relationship with Tesla. For here, Ola is a private company, but let's say, I'm just making up this case, that large part of their profits come by their business route, let's say, Majestic to KR market. There are lots of taxes by applying. One can tokenize this route. Once I have entire information on a blockchain. So what will happen is that once you do this, we discuss equities, we discuss fixed income, but once we do this, we'll have more securities to play around, more types of risk return profiles will be available to investors. That will mean that efficient frontier that we draw in the first or second year of CFA, I forget which year we draw that, will move, shift. For same level of risk, we'll have higher returns. Now, what are the things that are required to be done? I explained the basic principles of what tokenization needs to be done, what needs to be done to make tokenization successful, other things need to be done. We talked about fraud risk. So, we need to marry AI and DLT together. Why AI? AI can sense the reality. DLT cannot sense reality. Somebody has to feed reality into DLT. Let's say we talked about real estate frauds. If somebody is making a building, whether it is getting built or not, somebody has to feed that information into a DLT to be immutable. If an AI-based algorithm does that, and that AI algorithm is somewhere else, managed by a third party, then the AI algorithm can say that yes, now the building is of third story or fourth story, fifth story. They can give some certificate of completion, which go in DLT and which enables you to value that asset better. So I have this slide now showing now for last 10 years that AI is probabilistic, changing, and algorithm to guess reality. Now, well, DLT is deterministic, permanent, and for forever records. So, just somebody mentioned in the previous discussion the question about Zellow's algorithm failing. Why did it fail? Because it didn't have the AI part properly built in. So, after 2008, I started saying this. So, there is mark to market, there is mark to model, and there is mark to hope. Right? So, Zellow's algorithm or many algorithms for pricing illiquid assets are mark to hope. How to move away from mark to hope to mark to model? Because price is still not available. Mark to market is not available. To move from mark to mark to model, you require a very strong AI layer. Now, how regulators need to react to this and how things need to change. Because as I mentioned, anything new comes up, the first people to take advantage are people who want to commit frauds. Yeah. So one is privacy protection should be there. Why it should be there? Because now everything is going to be on a DLT platform, on a token platform, and which is going to be publicly available. So it should be encrypted. Only those people who are authorized to decrypt should be able to decrypt. So entire system needs to be on blockchain, not just the layer of transaction. Not just the layer of transaction, entire system should be on the blockchain. Not the thin veneer of interface between the investor and the security. The things behind the security should be on the blockchain. So we talked about, let's say, secondary market in PE assets. The entire investment process of PE investment and reporting between the investing company and the PE should be on a blockchain. Only then the real value of putting the secondaries on token will create value. Otherwise, it will be just thin veneer which may not create value. I'll explain this further in the last slide. Strong encryption. I mentioned triple accounting system. We require strong encryption. I'll talk about it more. And privacy protected machine learning. So we have heard about machine learning and AI, but everything that happens in machine learning and AI right now, as implemented, does not protect your privacy. But new algorithms are coming in, which will protect your privacy. You don't have to decrypt the information. On the information which is encrypted, machine learning can be performed, and hence value can be sensed. That is another thing that regulators need to enforce. I think this I explained earlier. So now, since we are talking about regulators across the world are moving at a very fast pace as compared to Indian regulators, and because they need to win this race. But as I mentioned, in technology adoption, the first person to adopt technology does not necessarily need to win the race, will win the race. People who look at things carefully, consider with considered opinion, can win the race. Now, people like Dubai and others, they have their own regulator for virtual assets. We don't have that. In India, we are having IFSC in GIFT City. We're looking at very positively at this development. RBI has already done CBDC. They will tokenize treasuries in Indian government bonds. Other things will follow. But again, I mentioned the thin layer of relationship between investor and the security. Definitely that is not sufficient to entire chain, value chain. So UN has done some work here. So we need to look at this work. So UN is taking steps to protect assets from surveillance capitalism. So we are all worried about Facebook and others looking into our messages. But when our transactions are going to be on DLT, we have to be far more worried about our privacy and how we protect the nation or society from surveillance capitalism. In my opinion, large part of, let's say, Meta's value comes from surveillance capitalism, what I call surveillance capitalism, which is not a correct way of acquiring value. But if they follow the UN guidelines, government can still create a good, strong marketplace and can also protect citizens. Another thing is that we require encryption which is very strong and quantum resistance encryption, because this is the multipolar world and other nation states will try to break into our systems to destabilize our economy, and more of our economy we put on DLT, more is the risk of they attacking us. And some of our enemy countries have developed very strong quantum algorithms. Hence, we require to use quantum resistance encryptions. So, privacy preserving calculations are possible now. In last 2 years, these algorithms are coming in. You can do simple addition, subtraction, or even machine learning on data which is encrypted. Very important that regulators should pay attention to this. I talked about this, next slide. Now I'll talk about what is happening in the global market on tokenization. So this is all, I think we saw a video, talked about all these things. And we discussed fractionalization and tokenization. And I think I have now explained how fractionalization is different from tokenization. Fractionalization is a very thin veneer, while tokenization goes into entire process of investment or accounting. This is the report by World Economic Forum. They project that by 2030, 10% of global GDP will be tokenized assets. And I believe that they are underestimating the potential. Some examples: global market, KKR has done a PE fund. Again, it's a thin veneer, but some start happened. $4 billion healthcare strategy fund, and they did $10,000 instead of $5 million regular. JP Morgan and Apollo are doing this Onyx. You can look up on the internet and find out more about this. India is, we are catching up. A decimal point we have got into technology sandbox with IFSC, and we are working with NHA to tokenize roads in India. So, I know there are many young people who might want to make career into this new upcoming sexy field. So, this is my thinking that this is how the job market will evolve, which will require understanding of variety of things. If you have any questions on this, I'm available for discussion for just half an hour. So this is the last slide that I'm going to mention, is that whatever tokenization efforts that we are seeing are thin veneers. And why it is thin veneer? That anything new comes up, people try to replicate existing things into the new technology. So I'm old enough to see remember the internet coming in. So when the internet came in, what restaurants did was they just took a scan of their menus and put on their website. That's it. All restaurants would have a simple website, and the menu would be there and telephone number would be there. So instead of distributing pamphlets, they had a website. So what is the value addition of that? Not much, right? How you look at the menu, you call up, book a seat, go, sit, have your meal. It took 30 years for us to evolve a Zomato, right? What it required? It required a payment mechanism. It required a mechanism to register users. It required a mechanism to have trust scores of restaurants, right? And it took about 3 decades for society to adapt to technology and take full benefit. Now, restaurants are able to take full benefit of being onto the internet. That is even Web 1, not even Web 2 or Web 3. Right? So this is going to take time. This is not going to happen overnight. It is going to take 10, 15, 20 years for it to fully evolve the way I am envisaging in this. Okay, right now what we are seeing tokenization efforts, whether Decimal Point is doing or some other people are doing, they are just like taking a scan of the menu and putting onto the internet. Very simple things. So many people might have come into the impression that tokenization is basically a old wine in a new bottle. What I am ending is that if we do all these things, tokenization is going to transform the finance. It is not a old wine in a new bottle. Thank you.
Done a great job in such a short amount of time. Very complex topic. So I had one question in which I think one of the audience also has. They haven't given their name, but you mentioned the work you're doing with NHA and tokenization of roads.
Yes.
So can you talk a little more about that? And same question here is, what do you mean when you say tokenization of roads?
Okay. So currently what we are doing is a pre-linear, and what we have plans is going to be go deeper. So NHA has an InvIT called NHA InvIT. They are issuing units anyways on NSE in India domestically. So those units would be first put into DR because for visa operation, and those DRs will be tokenized and offered to international investors outside the purview of SEBI and RBI, but in the purview of IFSC. So investors who don't want to come through the route of SEBI and RBI because they find it too cumbersome, they can come through IFSC's light touch regulation. So that is this thing in here. But the next step is then tokenize each and every toll booth separately. So right now, in their case, they are tokenizing the entire entity. So they are having 4 roads, they are adding 5th road, 6th road, and the entire thing is a mix and match. Somebody has a view on a particular road or a particular toll booth. If there is no way of expressing that right now, that would be feasible in future.
Got it. I hope that answers your question. So one more question I had, which again, Anil, I think has, what is the status of tokenization in India and what regulations exist? So to add to that question as well, can you explain this concept of the regulatory sandbox that exists?
Okay. So as of now, the regulations for tokenization in India are zero. There are no regulations. There could be a discussion paper coming out in next few months. So what is this sandbox? The sandbox which IFSC has come out has 2 stages. One is technology sandbox and other is a regulatory sandbox. Technology sandbox is just through technology, the technology works, you do dummy transactions. No real transactions, but it tests the technology has any flaws that might come in future. Once that stage is passed, you go into regulatory sandbox, where they will have some light touch regulation and some transactions under very close watch, real transactions will happen. And once they observe that, they will come out with the detailed, let's say, regulations under which tokens can be issued freely.
Yeah. So Anil has Vivek has a very interesting question, philosophical question, if you will, which is public companies, they already say that it promotes short-term thinking because there is a quarterly pressure, etc., etc. So now if you tokenize a lot more things, there is going to be so much more pressure in more areas of life or more areas of commerce, finance that we have. So is that necessarily a beneficial thing?
Very good.
It's a good question.
Very good question. And I have an answer for this because I also run a company where I have investors. Okay, so see, if you are not confident of your own business model, you will blame the quarterly pressure. That pressure doesn't come on Amazon's previous CEO That doesn't come on Elon Musk. They do whatever they want to do because they are confident. Right? People kept on saying that if Elon Musk follows this path, he will go bankrupt. He will not change his path. Right? There is so much pressure on his company. There is so much attempt to take down his company. He did not budge. It is your belief. And that belief have a relationship whether you are reporting quarterly, annually, half yearly. Because the moment you have investors, whether you are listed or unlisted, they are going to ask you questions. And the questions, whether you are able to answer those questions, depends on how much belief you have, faith you have in your vision. Hope I answered the question.
Alright, so, one question I have for the audience is this, as far as I can remember, the CFA Institute curriculum does not go into tokenization. So do you think tokenization should be part of one of those learning objective statements? How many of you think it should be part of it after? So I think you've convinced. So that is some feedback the CFA Society maybe you should take and say level 1 or level 2. I think we already have digital assets and curriculum around that, so introduce one of those things. So we have a question, one more question, which says that how does this DLT tech compare with the government managing e-billing for registered companies? I'm not sure if I understand the question. But
So yeah, let me try to answer that. So it is e-billing is a centralized platform, while DLT is a decentralized platform. The difference is that whether you trust the government to maintain it or whether you want society to maintain it. That's the difference.
got it, yeah. So one question about costs of technology. Shubham has this. Blockchain has a big cost to maintain. So how will this impact the adoption of
Very good question, Shubham. That is why I am using the word DLT. I am not using the word blockchain. I did not did any project on blockchain till 2020 because the cost of blockchains is too high to do anything meaningful on scale. Not possible. Not possible. But there are other technologies under DLT. One of them being Hashgraph, which we adopted, which is very cheap. It just costs nothing to run transactions on that. And you can run billions of. So you can go onto a website called realtps.net. Realtps.net. So TPS is transaction per second. And you will find the number one network there is Hedera. And Hedera is, when all others are blockchain, Hedera is not a blockchain.
So we have, two interesting questions. One is like a short-term investor and one seems to be a long-term investor. So it's like, how can we invest in tokenized assets in India is one question. The other question is, how can you capitalize on this opportunity of tokenization?
Yes, good. So how can you invest in tokenization? As of today, if you want to invest in a regulated token in India, things are not available. Unregulated tokens, we have heard of many, and there are many such available. You can invest there at your own risk and peril. I won't recommend that. How can you capitalize this? Now, this is a new paradigm. You are now lifted by your imagination only. So, I am from Maharashtra. I am very proud Marathi. And I want to preserve, let's say, Shivaji's forts. They are dilapidated. One of my dreams is that I will tokenize the tourist revenues on the forts and help preserve those forts. So it is up to you how you can think of tokenizing. You can do anything from invoice financing, invoice discounting to preserving forts. Everything is possible. But regulations will take time. Especially young people need to be patient while dealing with changes.
In this context of everything can be tokenized, I read in the Wall Street Journal 2 days ago that you can actually invest now in the royalties paid to a singer of a particular song. So if you're like a fan of Taylor Swift, for example, you can buy an asset. This company is called Jukebox, JKBX, I think. So you can become a fan as well as support, get some financial returns out of it. So that's an interesting concept. So Anirudh has a question about the technicalities of Hashgraph. I request you to take it offline with Mr. Shailesh. So one question is, the RBI governor has talked about tokenization of bank deposits. So how do you see that playing out?
So what happens in bank deposits right now is that I put a deposit in a bank and it becomes a liquid asset. To the sense that I can go and take a deposit, but I will pay the penalty interest rate, whatever the penalty the bank is putting. Alternative is CD. I hope all of you are aware of CD and FD difference. Like CDs can be traded, right? Yes? Yes, okay. So a tokenized FD is a CD. So you can then give it to somebody else.
So we have quite a few questions coming up, so great job, please keep them coming. So please give times of just say like the indicator of the time here. So can you talk about, you explain how tokenization and fractionalization are different, but they're also going hand in hand. So any comments on that?
Yeah, so see things, if I give a simple example, living relationship and marriage both look same, they are different. Right? Fractionalization is living relationship, tokenization is marriage.
So dating and marriage. Okay, so now there's a question on the yin and yang of AI. So what happens to tokenization when AI hallucinates? So that's the gist of the thing. So does this increase the volatility of markets?
So if I want to answer this, so I am not saying LLM boss. Okay, I am saying AI, and AI is, at very first thing I mentioned is the probabilistic. Okay, so AI is probabilistic, it's not deterministic. So keep in mind that putting things on AI is not going to remove your risk 100%, because no AI that I have seen implemented is 100% accurate. But it will be lower cost option than sending a photographer every day to a site to take photograph. Okay. So it reduces the cost of information, it reduces frequency of information availability, and it increases confidence in the information. And as AI becomes more robust, AI is now just 30-year-old phenomena, it will progress further. As it becomes more robust, your confidence in that outcome will also become more robust.
So I have one question which, I'm very active on Twitter, at least consuming things on Twitter. So the feeling in fintech right now, and this was a feeling in the digital asset industry before, that the regulator is very unfriendly. So for young people who want to make a career out of this thing, it's like go west young man or go out of India type of thing. So what is your advice to young people who are interested in this space, and how do they, and regulation probably is the elephant in the room for a lot of fintech companies in India right now, not just this thing. So what is your general take on how do you see regulation playing out, and what's your general advice?
So I have been fortunate enough to deal with regulators in India for more than 3 decades. They are slow, but when they move in such a way that the things that come in are the world class and unbeatable. UPI is one example, but UPI is a recent example. You have CCIL for bond trading, which is unmatched in the world. The equity trading at T+1 settlement. Nowhere else we have T+1, we are talking about T+1 over settlement. Okay, so in terms of technology adoption, India eventually will be far ahead of others. But that is eventually. You will have periods of many years in between where they will be mulling over this, and you will be thinking, kuch nahi ho raha hai. But because the thing is that India is a very poor country, with very low level of education, people can be misled, people can be defrauded. So they take steps very with chance the steps they take major steps. but the steps are in right direction. They want to adopt technology. So if you want to be at the cutting edge in 10 years time, stay in India. If you want to be cutting edge in 1 year's time to 2 years time, you should go abroad. So that's my simple solution.
I think that's a great way of putting it. So an interesting question, we don't have the name of ask you, but how does wholesale financing, okay, so this is like, sorry, the previous session. So can you talk more about the investor education that would be needed? Like you also mentioned that there is people who have adopted this first are the people, the greedy people, the hucksters. So probably we heard of tokenization first in 2017. So this is like probably the second wave of tokenization that we are seeing. So what kind of investor education is needed or should be done?
Yeah, so I think both RBI and SEBI should spend more money on investor education, and people should be made aware that there is no free lunches available. If somebody is offering you higher return, there is some risk lurking somewhere. People don't understand this, people run behind higher return. And what happens is that there is always a new people who come into market who are gullible. So especially for younger generations, the education should be more. One should have gaming systems. We talked about gamification in the previous thing. So one way some of the companies, large companies, train their fund managers is by running gaming systems. Whether fund managers and the traders trade on a game and not actual money. But they are rewarded as if they are actually outperformed, underperformed the market. So that kind of systems should be brought in by government, where people can take positions. If somebody is offering 11%, somebody offering 10%, and then somebody defaults, and what actually money you are left with. So Sandeep mentioned that he is allowing his kid to play with smaller amount of money. But not everybody has that risk capital. People who are drivers and their kids don't have that risk capital. But we should make games available to them so they can learn through those games.
I thought like games stop.
Not games stop. They should play games and they should learn that markets have cycles.
Got it. Yeah. So I think we don't have any further questions. But I mean, I think for people who are intrigued by what you've said, people who want to learn more, what are some of the resources that you would suggest they start their learning journey?
For tokenization?
For tokenization, okay.
So there are very good blogs available which are on tokenization and also podcasts. So I will make those available to this group afterwards. Right now I don't have it readily available, but that will be right. So whatever knowledge that I have gathered here is by listening to hundreds of podcasts and then putting it together.
Wow. So thank you so much. I mean, you distilled a lot of the knowledge and we're out of time as well. So
One question?
yeah, please.
Sir, if possible, like I can make token of my own portfolio and try to.
Yes. So that is a next level of gamification that is going to happen. So in fact, we worked with an Israeli company in 2009 to do that, but not on token. So what they are doing is, if I have one more time, okay, what they are doing is, so there are various traders. So you as a trader would publish your trades, real-time basis, and then others can follow. If you are a good trader, people will follow you. If you are a bad trader, people will not follow you. So you tokenize that, and what will happen is then the discount brokers will be behind you. If you are a good trader, if you are a good investor, people will be behind you say that I want to use your tokenized portfolio to show to my customers who can follow and trade, and you will get a share of their brokerage, and so you will make returns above your returns. So that is the way.
So we have some time and I'm getting indications, so there are a few more questions.
Yeah.
So how do we ensure the data integrity that for the data that is going into the DLT and that is not prone to manipulation? It's from Arun.
Yes. So that is why I talk about triple entry accounting system, because if you don't marry your DLT to your accounting system, it can be manipulated. Now, in this case, if you do triple entry accounting system, both parties to the transaction have to agree to a product, which has a lower chance of happening. And since the transaction is on the blockchain, all things like TDS, GST, and other legal implications will also follow from that. So it is not just a PDF report being sent of my performance, it is actual transactions being on triple entry accounting system.
Okay, so we got two very interesting questions. So you will have so many more new asset classes in a tokenized world. So how do you manage the tail risks is one question. The second question is around how do the secondary markets for tokenized assets function?
Yeah, so secondary market for tokenized assets will again be a distributed exchange which would trade into those. Hopefully liquidity there will be better because the information would be available more widely. And in case of tail risk, the tail risk evolve because information either is not available or B not appreciated. So let's say 2008. In 2006, 2007, everybody knew that the loans are marked to go, but nobody bothered about it. Now that part cannot be taken care. That's human psychology. Okay. So that will remain, but information available that whether the thing is performing or not performing, that will be available to you in more real-time basis. Hence, the chance of tail risk will reduce.
Yeah. So does anybody in the room have any questions?
Sorry, my phone is not working. I wanted to understand portfolio tokenization. How is that different from say, an ETF or a mutual fund unit?
Portfolio tokenization. So mutual fund is a pooled asset. Right? He is asking about his own personal portfolio tokenized.
Okay, so that would again be an unregulated product.
Regulations have to come for that. Technology is enabling. Right now, they don't take regulation. So after 4 or 5 years, regulations will come for that. If somebody is HNI and he is managing his portfolio very well, and he is willing to make it public, and get investors and also get commissions from this fund brokers, government has to allow that somehow.
Mohan?
How do you technically differentiate NFTs and tokenization?
NFT is non-fungible, so an art piece is NFT, while a share in a company is fungible, because whether I buy share number 1 or share number 100, it is the same. So both are tokenized, but one is value is derived because it's just one of it. A painting of Mona Lisa is a NFT because it's just one of it. Other derives value from cash flow.
And also, is it that one has to be a digital asset and others can be a real asset?
Yeah, so NFT has to be a digital asset, but backed by either a real asset or by some PDF or something.
So we have a very interesting question here. The tokenization markets haven't taken off, but here we have a question from Ankit, who wants to create derivative instruments on tokens. So how do you
It's very simple. See, derivative can be created on anything, right? You can create derivative on your job also, right? So उसमें क्या है? So derivative is just imagination, a contract between two parties. So that can be created on anything that you can think of. So just underline can be equity instruments and fixed income, commodities, real assets, real estate. Let's say if we do toll collection, it can be anything. Underline can be anything. The principle of derivatives is different. How it is, whether, say people have done derivatives on spot prices of power supply, right? Power supply spot prices are so volatile. Most of the day they are constant, but for 1 minute they might increase by 10%. So even those asymmetric assets, people are calculated call options and put options. So this would be far more stable assets.
I think you should be prepared for the tokenization financial crisis of 2050.
Yeah. This is Ashish. We nowadays talk a lot about the Bharat's growth story across the world, right? India's growth story around the world, right?
Yes.
So my question towards the tokenization is India ready towards the tokenization? And if not, what are the few areas which will be required to go forward apart from the regulatory requirements?
So I think in terms of need of financing, India is ready. In terms of outlook of investors in India and abroad for investing in India, again they are ready. What is remaining is education of investors and regulatory clarity. That's the only thing that is remaining. Otherwise, we are there.
And probably given you are working with the regulators and the different stakeholders around the same fraternity. So what do you think in what n numbers of years India would take to go forward doing this?
So in my opinion, by 2030, if 10% of global GDP is going to be tokenized, at least 1/6 of that will be from India. Yes. Because we are growing so rapidly, financial markets will grow even more rapidly than GDP, and these things will grow more rapidly if we don't have scams. Scams will happen, they should be contained and managed. Yeah.
So one last two questions. We got a signal that it's time's over, but please keep these questions brief. Yeah.
So 2 questions.
Please keep it to one. Yeah.
Okay. So in this case, because we are tokenizing everything, valuing every single bit will become extremely important.
So a lot of jobs for CFAs.
So data collection for the same would also be
Data collection, yeah. Different types of models, comparing different types of models.
Slide number 25 of his presentation.
Yeah.
The gentleman, one last question. Please be loud. Yeah.
So in global markets, when there is pricing inconsistency, a lot of the balancing out happens because of arbitrage. Now, if we have a tokenized market where it's a very rare asset, for example, liquidity on markets is going to be very low. And if there's a pricing inconsistency on the market versus what the actual price is, how is the risk managed there from the entity providing tokenization services?
Okay, so first of all, I will clarify that arbitrage in global market happens only in few assets. It doesn't happen in all the assets. And we have seen pricing inconsistencies in global markets lasting for 5 years and 7 years. So it is not just India. See, when I started my career in India, 90% of Indian bonds were illiquid. And I used to think that the bonds in global markets, they are priced perfectly. Then 2008 happened and we knew they are also not pricing. Even now, most of the pricing of bonds in US market is mark to model, not arbitrage driven pricing. So nothing different. So just because secondary market is not more developed, you don't stop primary market development. That has to happen. And some people are willing to take that risk, that this secondary market will not develop, but I have getting exposure to this asset class, let me take that exposure.
Thank you so much, Mr. Shailesh. And I'm sure many of you have questions, so he's kindly consented to take questions offline for the next few minutes. So please utilize that opportunity. And please give him a big round of applause.